Good afternoon, friends. On 8th October 25, the GST network has issued an advisory that invoice management system remains the same. However, there are two important changes. Number one is credit notes and related documents can be kept pending now for 1 month or one tax period. And number two, while accepting or rejecting the credit note, part acceptance and rejections can be done. For example, out of 100 rupees of a credit note, maybe even 80 or 70 can be accepted and balance may be rejected. But very important is that now the invoice management system is the law of the country. While amendment in section 38, 39 and 34 of the CGST Act from 1st October 2025 due to issuance of notification 16 of 2025. So section 38 and 39 are the provisions which enable the mandate of invoice management system. Section 34 of the CGST Act is amended and notified from 1st October 2025. The proviso to section 34(2) now mandates that for every credit note, the supplier can reverse its output tax liability only when the recipient has reversed the corresponding ITC in case of B2B invoices. And how do you ensure it as a supplier? Only through invoice management system, which now is notified from amendment to section 38 and 39. Therefore, it is very important that in October 25, when you file your GSTR3B next week, you take care of the invoice management system. Now, on 23rd of September 2025, there is an advisory of the GST network where 4 types of documents, out of which 3 of them which are mandatory and which are very important, we will discuss in this video, can now be kept pending for 1 month or one tax period. But hold on, it has to be kept pending with precaution. So first document, now the recipient can keep the credit note pending for one tax period or 1 month. That is, instead of reversing the corresponding ITC in this month, it can accept and reverse in the next month. But as per section 34(2) proviso, the supplier who has issued the credit note cannot then reverse the output tax liability. Otherwise, there may be an implication of interest. And how does the supplier know it? It is only through invoice management system. So, what is the solution to this? In case, it is our view of course that in case the recipient has not accepted the credit note, it has kept the credit note pending for the next month, then the supplier may also defer the reversal of the output tax liability for 1 month. Otherwise, at least sufficient balances should be there in the cash ledger or the credit ledger, or a payment be made correspondingly through DRC 03, so that in future on the supply side, in case an interest burden is saddled, then it can be contested that it is a revenue neutral situation as held by the various high courts and even Honorable Supreme Court in certain cases. Now, on the recipient side, in case it reverses the corresponding ITC after 1 month by keeping the credit note pending for 1 month, interest under section 50 subsection 3 may be sought to be invoked for excess ITC availed and utilized with respect to the original invoice. Therefore, it might be a prudent view to keep a sufficient input tax credit balance in the ITC ledger also. Number 2, in case the recipient rejects the credit note, then as per advisory dated 23rd of September 25, the supplier can use the current period GSTR1A to reduce the value of the credit note even to 0. However, if not done in the current tax period, then it can make an amendment in the invoice or the credit note in the next tax period. However, again, there might be a question of interest due to this delay of 1 month. Therefore, again, while it is an option now on the IMS, it has to be used precautiously, and possibly to that extent a balance in the cash ledger may be maintained, or a payment through DRC03 can be made, which can be finally adjusted in GSTR 9 going forward. Third situation. Now, in case a recipient has earlier accepted an invoice or debit note, and now there is a downward amendment of such invoice or debit note, then the recipient can keep it pending. Again, there is a question of interest, as the corresponding output tax liability has already been reversed by the supplier. Therefore, again, in case the downward amendment of debit notes or invoice is kept pending for 1 month, the recipients may have sufficient balance in the input tax credit ledger. So, these are the important 3 documents in the invoice management system from October 2025, which you need to be very careful about. And now, after amendment of section 34(2), 38, 39, it becomes almost mandatory for all the taxpayers to follow invoice management system, so that going forward in assessment, these liabilities on account of interest, etc., can be contested or saved on to. Thank you very much for watching. Please do like, share and subscribe to this channel. Stay tuned. Thank you very much.